Welcome to My Steel Commodity Flux, the podcast where we track the trends, turns, and turbulence shaping global commodity markets. This is Nikki Fu, Commercial Director at My Steel Global, responsible for growth strategy across our new business sectors. China remains Asia's biggest energy importer, so what China does next matters for the whole market. Recent tensions around the Strait of Hormuz put supply security back in the spotlight. But as concerns over potential disruptions have gradually eased, attention is shifting from supply to how major consumers, especially China, are responding. Today, we'd like to take a closer look at China's market and discuss what's driving energy demand in the current environment. Joining us today is Liao Na, Chief Consultant of Energy Policies and founder of GL Consulting. Liao Na, welcome back.
Thank you, Nikki.
During the recent tensions, many expected the Strait of Hormuz to become a major bottleneck for Asian energy supplies, yet the market adapted relatively quickly. How do you assess the role of supply chain adjustments during this period?
The Strait of Hormuz remains strategically important, but the market has become more resilient. We saw exporters make greater use of alternative routes and loading terminals, allowing cargoes to continue reaching Asia despite higher shipping risks. As a result, the immediate supply disruption was far less severe than many had anticipated.
Despite oil prices easing from their recent highs, China's buying has remained relatively cautious. We haven't seen a significant rebound in crude imports. So, what does that tell us about China's crude oil demand today?
The easing of shipping risks certainly improves supply availability and supports lower prices, but it doesn't automatically translate into stronger demand. Today's procurement decisions are shaped by a much broader set of factors. Profit margins remain under pressure, inventories remain high, and demand for transport fuels hasn't recovered. As a result, procurement is now driven more by real demand than by short-term price swings. This is why China has stayed cautious on lower prices rather than ramping up buying activity.
So it seems like understanding China's domestic fundamentals is now just as important as tracking international prices. Would you say that applies to other energy commodities as well?
Yes, and LNG is a good example of that. Despite concerns over Middle Eastern supply, China's overall LNG supply remained stable, supported by diversified import sources. Coal tells a similar story, but from a different angle. Rather than being driven purely by coal market fundamentals, coal demand has also been supported by fuel switching. As natural gas prices rose, buyers shifted toward coal. What this tells us is that energy markets are more interconnected than ever. You can't look at commodities in isolation anymore.
And how is China's changing economic structure shaping its energy demand?
China's economy is becoming more diversified. Some sectors continue to expand steadily, particularly advanced manufacturing and export-oriented industries. At the same time, property-related activity and some traditional industries remain sluggish. As a result, energy demand is becoming more differentiated across sectors. Demand linked to manufacturing supply chains has shown greater resilience, while gasoline and diesel consumption continues to face downside risks, partly due to weaker construction activity and the adoption of electric vehicles. So, when assessing China's energy outlook, it's increasingly important to look beyond headline economic indicators and consider where growth is actually coming from.
So looking ahead, with geopolitical risk here to stay, what should market participants be watching most closely on China's energy demand?
I'd highlight 4 areas. First, China's domestic demand, particularly industrial activity and transport fuel consumption. Second, refinery margins, since they remain a key driver of procurement decisions. Third, how China's economy is evolving, because not every sector drives energy demand in the same way. And finally, geopolitical risks. They shape supply, but China's domestic demand determines how the market responds.
That's really insightful. China remains a key source of demand for global energy markets, but the factors driving that demand are becoming increasingly diverse. For market participants, understanding China's domestic fundamentals matters just as much as tracking developments in global supply. Thank you, Liao Na, for joining us and sharing these insights. And for those who would like to follow these developments in a more structured and forward-looking way, GL Consulting acts as your China decoder, turning complex policy and market signals into clearer, decision-ready insight for global energy and chemicals professionals. For more information, please visit mysteel.net or contact us at inquiries@mysteel.com. Thanks for listening to My Steel Commodity Flux. If you found today's episode helpful, be sure to subscribe for more analysis on global commodity markets. Until next time, keep tracking the flows.